Ken Mahoney joining the conversation here. And Ken, we're talking about bond yields. Dagan's mentioning the 10-year. Look at the 10-year right now at 4.1%. And yet we had a winning week in stocks last week. What do you make of these higher yields, and how much higher can this go?
Right. Dagan hit it right on the head. I mean, it's competition of stocks. I mean, before, remember, about a year ago, 2 years ago, you have the 10-year trading at 0.2%. You say, might as well take my chances in the stock market, right? Now you have foreign change. Remember, most pension bogeys are 6 or 7%. So that's going to allocate a lot more money to bonds, hence the competition in the stocks. And of course, you know, the 10-year is really kind of how you determine mortgage yields, right? So 420, Adam, 7.27% mortgage rates. And, you know, we've all lived with higher rates, you know, back in the 80s and so forth. But the velocity of rates is what scares everybody. I mean, coming, you know, into this year after Christmas, 2.75 mortgage rates, at 3% mortgage rates. Here now 7.25. And you hear from realtors left, right, and center. You know, we used to have 30 people at opening house. Now we have like 2 or 3 stragglers that come in. So this is unfortunately the next leg that's probably going to hit is the housing market.
Yeah, I want to get your take on the housing market. But first, what do you make of what went on overnight in Hong Kong? Look at this market. The Hang Seng Index plummeted more than 6% overnight. After the People's Congress closing ceremony, you know that we saw a wave of selling in Hong Kong and in China overnight, Ken, at the conclusion of the Chinese Communist Party's National Congress, where Xi Jinping cemented his place as dictator for life. And look at this video. His predecessor, the former president of China, was taken out of his seat and escorted out of the room against his own will. Would you invest in China knowing that Xi Jinping is now dictator for life, and he just took out his predecessor in the People's Congress? Nobody's saying anything. Everybody's scared, so scared to go against Xi Jinping now. He's obviously more empowered after the People's Congress, and I think that's why you saw this sell-off in Hong Kong, with the Hang Seng down 6.3%, the Shanghai Composite down better than 2%, Ken. What's your take on this?
Yeah, and probably more to go, to tell you the truth. I mean, really, if you see that anywhere around the world where the president takes out one of his own, basically, and escorts him off, you know, he's consolidating power. And, you know, all along been China's trying to say, well, they're free markets and they're free markets. Let's not fool ourselves here. This is a communist. This is a dictatorship. It's a nasty dictatorship. You go against them, you won't appear anywhere. You won't find yourself anywhere. And you see this over and over again. So to your point, Maria, this is a very scary moment, especially, you know, I think they're going to also push the Taiwan envelope a little bit further here with this kind of maneuvering. And that's, I think, what's scaring the markets mostly in Asia is the Taiwan market and the exposure that they have to this brutal dictator.
I totally agree. Dagan, remember when they celebrated the 100-year anniversary of the CCP, and Xi Jinping said something like, anybody who gets in the way of our plans with Taiwan will get their heads busted to dust.
I remember that. And watching this, every international and global CEO should be thinking about, if they weren't already, doing business in that communist nation.
That's right.
If they weren't already questioning what Xi Jinping and the Communist Party are doing after COVID was unleashed on the world, and then they covered it up. But
That's
now
right.
This?
Terrible. Liz?
Well, I also think it really has a big influence on earnings growth for a lot of big multinational corporations. We're looking at a Chinese economy that has slowed radically. Their stock market is back to, I think, where it was like 15 years ago. People are really pessimistic about what China's outlook is, and that really bears a lot on where our treasury yields are, where corporations are going to be investing. I think this is a big deal, Maria. People are very worried that Xi Jinping policies are bad for China and bad for world growth.
Oh, yeah, it is a big deal. Ken, bring us back domestic here. We got a big week of tech earnings. We've got the GDP and the PCE out. Your expectations, Ken?
Right. So first off, sometimes you come in hot into earnings season, and then we get to kind of sell the news. Obviously, we're not coming in hot into earnings season. We're coming in limping with broken collarbones and everything. And sometimes expectations so low that the hurdle's low enough that we can go forward. Yeah, big earnings, Apple, Microsoft, Google, Amazon, on down and down Blitzen. Listen, one thing I always tell your viewers, don't jump in front of this. That's like Russian roulette, okay? Jumping in front of these earnings. I'd rather wait till they post earnings, even if they pay up a little bit. The last thing you want to do as a investor is find a company that misses, guides lower, goes down 20%, and you jump on, and now you're in quicksand for the next 3-4 quarters. As far as GDP, that's kind of interesting. I know it's all over the map. Goldman Sachs at 1.9%. The street's mostly 1.5 to 2%. But the Atlanta Fed, not only good at trading during blackout periods, but they're also good at estimating. I mean, they're the first ones to say first quarter, second quarter be slightly negative. They have 0.3% for this quarter. And if we're going to talk about definitions of recessions and everything else, that's a definition of stagflation, right? This is no or little growth with high inflation accompanied with. So this is what we're going to see. So I kind of believe closer to the Atlanta Fed, who's been bringing those numbers down the entire quarter anyway, to around 0.3% GDP.
Yeah, that's a great analysis, Ken. It's good to see you. Thanks very much, Ken Mahoney.